Kitco News, special coverage of Bitcoin 2022, is brought to you by Coin Payments, crypto payments made easy.
I'm Michelle Makori, coming to you from the world's biggest Bitcoin gathering, Bitcoin 2022, here at the Miami Convention Center. And joining me now is one of the biggest, boldest Bitcoin advocates, none other than Mr. Wonderful, Kevin O'Leary. Kevin, so nice to have you in person with me.
Great to be here. It's wonderful. You can feel the vibe of the conference in this press room.
Yeah, there is tremendous energy. 25,000 people in attendance here today, I believe.
Yeah, and that's every day. So it's going to be, by the time it's over, 200,000 people have come through these halls.
And they were saying earlier today that this is, in fact, the largest financial gathering in general, never mind just about Bitcoin, that there really isn't a financial gathering that has 25,000 people of all walks in life in the same space. So tremendous energy. And we were chatting earlier, and you said that one of the biggest themes that you're seeing coming out of this conference is focused on policy and regulation. And I know you have your 5 vectors of regulation that you addressed in your keynote. So maybe we start with you breaking those down for us.
Yeah, I mean, what was so interesting about this conference, which I've never seen in previous years, was the first day was dedicated to institutional investors, of which the majority do not own any crypto, and yet they packed the room. And so what they're interested in, and certainly I as an investor am interested in, is what are the policy metrics? And there's 5 in the market right now. Yellen just spoke minutes ago. You could call her the 6th if you want, but she's more of the same in terms of the POTUS executive order. So here they are in order of almost how they were brought to market. Number 1, Senator Lummis. She is crafting this massive bill. It's over 600 pages. It's huge. That'll probably be chopped into multiple pieces, but she's inviting everybody to the Hill that's interested, and she's asking for input from the private sector, including investors like me. We're all going there because we want our say, and as a result, it's a bipartisan effort. You don't see anything in Washington. So her policy embraces policy on Bitcoin, stablecoins, but not yet on NFTs. So that's what you know about that vector.
Okay.
So that's not going to address NFTs. Then there's POTUS's executive order. That's number 2. The good news there is he's not outlawing cryptocurrencies. He's embracing it for the productivity enhancement, but he's telling you he's going to regulate it, and you'll have more coming out to you. You've heard it through Yellen in 6 months.
Right.
But buried in that order is a concern about climate change, and that is a direct swipe at the Bitcoin mining industry right now, which is coming under scrutiny for ESG. You know that.
Yes, we've discussed that at length. Yeah.
Yes. So that's number 2. So you're starting to see a theme emerging around ESG, because when you examine the BlackRock letter, if you want to call that, the order, the demand about climate change and carbon, Larry Fink is doing the same thing. He's looking at carbon credits, and he's calling them out as being not a true way to get carbon neutral. But now it gets worse, because another vector that just hit the market in the last 14 days was the SEC memo about requiring carbon audits for every public company. Now that is scary.
Well, that opens up a whole other conversation into the carbon credit market, voluntary carbon credits, offset carbon credits. Before we dig into that, I want you to continue going through those
vectors of regulation. I gave you 4. The 5th is just 48 hours old. It's the bill. It's the bill that's coming from Haggerty.
Right, the stablecoin focused bill.
I have this bill. I want to show it to you. 1 page, 2 pages. I have never seen a bill from a senator that's 2 pages. And the reason I think he did this is so that every senator will read this bill.
Usually reams and reams of paper, nobody even looks at them.
I read it. It's genius. And all it says is, let's deal with one important vertical of crypto, stablecoins. Mm-hmm. Let's regulate them in a very simple manner. Let's disclose what's inside them, what backs up the value of them. Let's audit them every month. And let's not let them own any asset with a duration of more than 12 months. This bill on its own, 3970, could revolutionize a multi-billion-dollar industry in the stroke of a pen. So this is the kind of policy that interests me. I spoke with the senator. The idea is to make this an easy decision. I hope he can drive this home, because right now we're in limbo on stablecoins. Now, stablecoins are contemplated in the Luma Bill too, but it's part of a very much larger act. This is a single act.
Okay, well, let's look at the Luma Bill first. What are your objections there? Is there anything there that jumps out at you as being problematic? Because he says it does have bipartisan support, which is a very rare thing in Washington these days. Does it have O'Leary support? What in that bill do you not like?
I'm coming to the conclusion, particularly after the feedback from the institutions here at the conference, we'll take any regulation. Give us anything. I mean, we're going to make the assumption, because it's bipartisan and they've taken so much input from the industry, that we'll get something that's workable. It may not be perfect, but the reason you care as an investor, the reason you would want Lummis to be successful, or Haggerty, is that the institutional capital is like a giant dam of a wall of money that can't invest yet. So it's a spigot of capital in the trillions of dollars. Not a dime of it has been put into crypto yet. Can you imagine what would happen to asset values if they start to allocate? That's the investment
there
thesis.
has been some institutional invest interest.
Practically zero.
According to Jason Urban from Galaxy Digital, he says we're in the second inning of institutional interest.
I share his optimism, but I would call it, we're not even in the game yet.
Wow.
When you talk to sovereign wealth and large pension, nothing.
Okay, so you're saying
He's talking look, there's small, primarily it's private wealth, family wealth, it's hedge funds, it's certain smaller institutions that used to buy the publicly trading shares of Bitcoin miners, but now they're worried about the carbon audit issue. I don't see it yet. What we really need is the SEC and the U.S. regulator to make policy, and then the allocations will start, primarily in Bitcoin, probably 50 basis points.
So what would be that watershed moment? What needs to happen for all of these institutions that you say are just waiting for clarity, for them to get that clarity?
The easiest way to do it would be to do what the Canadians did and simply allow the first American-traded Bitcoin ETF, which could be purchased as a security into mandates that are already set up to purchase securities, like shares. Because they don't have to buy Bitcoin, they don't have to set up a separate wallet. They could simply say, okay, here is a true ETF with the underlying actual Bitcoin,
right?
And we can simply allocate 50 basis points to a $100 billion mandate. We can buy the ETF. That would be the easiest path to take. My guess is they're not going to allow that. There's multiple applications for that ETF, of which none have been granted.
Just had Kathy Wood's one rejected very recently.
Exactly. And so it doesn't matter which one is actually licensed, because there'll be 10 more that will come immediately. But we're going to need an order from the regulator to allow institutions to be compliant when they buy Bitcoin itself.
And you think the first step towards that order would be the approval by the SEC of a spot ETF?
Yes.
That gets the spigot open?
It starts the spigot open. If that happened, it would be like what happened in Canada. To me, Canada is like a regulatory fishbowl. You test stuff there, and it's working. Nobody's been harmed by that ETF, and now they've got an ETF with Ethereum in it, and institutional clients in Canada and individual investors can put it into their portfolios.
Right.
And they are doing that. Billions of dollars worth of it has been allocated, but we need it to come from the regulator in the U.S. because so much of the regulation around the world in other jurisdictions is based on SEC. And so I like what Haggerty's doing by saying, let's not try and solve all the world's problems. Let's just pick one asset in crypto. The easiest would be stablecoins. That may be the first to move. That would signal, and certainly the fact that this bill is out there would signal that there's an interest. And Toomey was on the air today saying the same thing. It's a good asset. The great thing about getting stablecoin nailed down on a regulatory basis in the U.S. is that it creates a global currency backed by the U.S. dollar. It keeps the U.S. dollar as the currency of reference globally. And I don't know why regulators and lawmakers in the U.S. wouldn't want that. They can do it with the sign of a pen, and everybody would get behind USDC or some other stablecoin, or maybe multiple stablecoins, but they're all backed by the U.S. dollar.
Is that the same as FedCoin?
No. FedCoin would mean that you're asking the federal government to actually sit down and code, which they're not going to do. That's never going to happen. They don't have the innovation. The government doesn't create innovation. The private sector does. USDC, stablecoins, all of them are software. You need innovation to create that
But we
stuff.
already have stable coins out there.
Yeah, but that was written by...
Pegged to the dollar. You're saying it should be officially backed by the government.
The government should regulate And the industry, the crypto industry we're sitting in the middle of here today, should innovate. That's how it should work. And so what I would like to see is the government license 10 stablecoins, just like there's a mutual fund from Schwab. There's one from Fidelity. They compete. I'll buy 4 or 5 of them, get diversity. There'll be slight nuances, slight differences. Maybe the interest rates on lending is slightly different. I just want competition from the ability to innovate and keep it stateside, make it backed by the US dollar, make the policy simple, make it transparent, make it auditable, and make it so that the assets that are underlying are not more than 12 months in duration.
What impact does that have on Bitcoin?
It would advance the value of Bitcoin in the sense they'd know regulation's coming. You're not going to regulate stablecoin and not Bitcoin. You're going to do both. The whole theme of this conference this year is regulation is coming, and it's a good thing.
Okay.
That's the investment thesis.
And it's a good thing. Well, it's one of the reasons that we know that politicians have been getting behind this is because it's a tremendous cash cow in terms of taxes. And we heard from Yellen today saying taxpayers should receive the same type of tax reporting on digital asset transactions that they receive for transactions in stocks and bonds so that they have the information they need to report their income to the IRS. You saying this is a good thing?
100%. And if I could be the industry spokesperson for just a moment, we agree, and we're going to do that. All the companies that I'm involved with in centralized and decentralized, like WonderFi, for example, which is under the Canadian order, we are already writing that code. We are going to be 100% compliant on tax reporting in every jurisdiction we're licensed in. I 100% agree with her. The industry wants to be compliant on that. Tax is, we understand we have to pay taxes, and we're all okay with that. Now, there may be some cowboy outlier that doesn't want to be controlled by a government. That's not me. That's not the industry. We want to be compliant so that we can have the opportunity to allow institutions to invest along beside us. That's going to provide the stability and the appreciation in value.
Let me take it to a philosophical angle.
Yeah.
Because you could argue that all of this institutional interest, all of this industry participation, in a way, is antithetical to the decentralized nature of Bitcoin. That Bitcoin is supposed to be more of the a form of money or store of value asset for the people, and that if we bring in all of this traditional finance into this precious new world of Bitcoin, we're really just essentially recreating the same mess or bad scenario that we're trying to get away from. What would you say to that? If we bring in these structured products and derivatives, and keeping in mind that that's how we got into the financial crisis, when you have structured products on top of a supposedly stable asset, does it in fact jeopardize the integrity of Bitcoin and the whole philosophical mission of Bitcoin?
The answer is no. And I'll explain why. The majority of the world's wealth is tied up in sovereign funds and pension plans. They vote with their investments. They want regulation. They want stability. They want transparency. They're willing to work as they have for hundreds of years on providing security to people that trust them to manage their money. And if there's innovation and technology available in financial services, it's coming through crypto. This is an augmentation to an existing system that has trillions of dollars in it. It's not a new system. It's a system that makes the existing system way better. That's the way you have to view it as an investor. And so all we want is to be compliant within the existing ways. We don't need to change everything overnight. That's not the way to think about Bitcoin or the entire crypto industry. It's to take the innovation that exists here and augment the existing system to make it better for people. And I'll give you an example. Stablecoins could change the entire FX industry and make it far more transparent, far cheaper, far faster. Solana blockchain could accelerate transactions 100x that are already, it takes you days to get your money moved from one bank account to another in a foreign country. How inefficient is that? It could be fixed overnight. You can't do it without regulation. Let's embrace regulation. Now, there are other voices within crypto that want to rage against the machine. That's not my voice. My voice is let's work with regulators. Let's make this a multi-trillion-dollar industry. Let's make this better for every person on earth and provide transparency to the regulator in the way it should be. What's wrong with that? Nothing. And my investment thesis, by the way, is that's coming, and it's going to appreciate crypto assets dramatically. We've taken this as far as we can get without getting institutions involved. That's the best way to look at it.
Okay, so if you want to accelerate the appreciation of your crypto portfolio, you're welcoming the institutions and you're welcoming the regulation.
100%. You've got it.
Now, speaking of saving the world, you've also said that Bitcoin miners are going to save the world.
Yes, they are, and I'll explain that one. Clearly, when you read between the lines of the SEC memo regarding ESG audits, the whole crypto mining industry claims itself to be carbon neutral by buying carbon offsets. That's fine. But you can't find an audit firm that will sign that audit because the tracking error of carbon offsets is so large that there's no way to prove it. So, in other words, if you're manufacturing a piece of equipment and it uses a lot of carbon-based power, and you buy an acre of land in the Amazon rainforest and you claim that you're carbon neutral, no auditor is going to sign that.
So you don't believe in the whole voluntary carbon credit market taking off in general, then, it sounds like?
I believe it if the auditor would sign it.
Well, maybe it's just a question of regulation catching up with carbon credits, just like regulation has to catch up with crypto.
Ask any auditor. The minute the SEC makes it a mandate, a law, I think that's the end of the carbon credit business. It is such, excuse my language, it's all BS. That's basically what I think, okay? So that's not going to work. And it's worked for years because you got to say, hey, here's a carbon credit. The airline industry is never going to be carbon neutral, no matter how many carbon credits they buy, and everybody knows that. But until there's an alternative way to fly, we have to live with that. Bitcoin mining, on the other hand, there is an alternative way, and this is why institutional capital is going to go to the alternative way, and that involves nuclear power and hydropower globally. So, in northern Norway, in northern Quebec, in Montana, in North Dakota, in upstate New York, these are places where there is an abundance of hydropower, and much of it, in some cases, unused. So why don't you just take a turbine, connect it directly to a computer that can basically hash out Bitcoin, and start being awarded coins that are 100% ESG compliant. There's no need for a carbon audit. Then you're not in this debate with the SEC or the POTUS order or BlackRock because you've done it with excess hydro or nuclear power.
Okay, so two separate points there. I want to circle back to the carbon credit market before we break down the clean energy Bitcoin mining. So you're basically saying that this whole notion where people plant a mangrove and that creates a carbon offset and then I buy that carbon credit and therefore I'm allowed to have 12 trucks, that whole industry that is sort of being put together right now is BS. You don't see that happening. This whole voluntary carbon credit in exchange, buying the right to pollute, if you will.
Yeah, BS. And until you can get an auditor, a public company's auditor to sign that, if you're doing that right now, if you're using carbon offsets in any industry, you better read that memo from the SEC. That should make you really nervous.
If the SEC puts together some regulatory body that oversees carbon credits and it's more formal, does that market have hope then?
You know, this is a classic case where you have to read the room, okay? Listen to Larry Fink. Listen to the POTUS executive order. Read the memo from the SEC and realize the public sector and the private sector is getting together in a rare policy to move us away quickly from hydrocarbons. The only debate we have on this topic is how fast we can do it. And I think we're learning we can't do it as fast as we hoped.
Right.
But all this initiative around, for example, in America, 90% of the dams made in the last 120 years contemplated hydroelectricity, but they never installed the turbines. Well, right now, I'm going to start installing turbines because I want to build data centers.
Okay.
So it makes economic sense for me to do that because I know that I can't get institutional capital into the data center market if I'm burning hydrogen or dirty hydrogen or dirty hydrocarbons. This is policy. So if you think you can carbon credit your way with mangroves out of that mess, I don't think so.
So I'm not disputing that the decarbonization trend is very real and the move to clean energy power is certainly gaining more traction now than ever before. I guess my question is, can they coexist? Can a voluntary carbon credit market coexist with the much better version of just getting clean energy to power everything in the
I think we hit the
regardless?
tipping point, and it hit me like a ton of bricks when I read the memo from the SEC. The regulators aren't buying the BS anymore.
Okay.
And
Neither is Kevin O'Leary.
Well, I'm just trying to go to the path of least resistance.
Okay.
The institutional capital that I work with doesn't want the controversy of
Got
carbon
it.
audits.
Okay, so you have Bitcoin miners changing the world, as you said in your keynote presentation, because they are going to finance a lot of these clean energy power.
They are doing it.
So my question is this. We've hit the 19 million Bitcoin mark. We've only got 2 million Bitcoin left to be mined.
And the halving is coming in
The
23.
halving is coming. April 11th is the mid-halving.
Right.
We've got the halving coming. So at what price point does Bitcoin need to be to justify the expenditure of building a hydrothermal energy source to mine your Bitcoin? If we took it like the example of gold miners, for example, for most of them, need to have gold at $1,000 an ounce to make it worthwhile their capital expenditure. All sustaining costs need to be under $1,000, otherwise there's no point considering how much it costs to mine. If Bitcoin miners are now going to create all of this clean energy in order to fuel their mining, what is the floor price for Bitcoin to make this worthwhile?
So your gold example is not a parallel analogy, and I'll tell you why. There's only a single use case for gold, storage value. When you build a Bitcoin mining facility, you're essentially building a data center. The new oil is data. Where do you store it all? Every country now, particularly after what we saw in the Ukraine, wants to store the nexus of their citizens' information in all sectors of their economy on their own soil. The demand for data centers that are built on an ESG mandate, in other words, hydro or nuclear, is huge in every country. If you're Brazil and you're licensing crypto exchanges, you want all that data in Brazil. Luckily, they have tons of hydropower. If you're in the state of Montana, they want data centers to supply data centers to all the industries there. So Bitcoin miners have the option to look at the economics of whatever the price of Bitcoin is and say, well, that's more attractive right now than providing data storage, or vice versa. So all of these new centers being built off hydro and nuclear are basically infrastructure. That's the way I look at them. So if it makes sense to mine Bitcoin, and I personally think anything over 50,000 or close to it.
So 50,000.
But we're sitting at 43 and change today. But when I look at the models that for the returns on what I'm investing in the Norway facility at BitZero, for example, I'm happy if Bitcoin stays at 50,000 for a couple of years. That's great returns for me. But it's forcing everybody to make better computing power and figuring out a way to use the center for other uses. In the case of the Norwegian village where that BitZero facility is, they're providing computing power for the local university. They're taking the heat off the stacks and growing tomatoes with a canning center beside it. The community is involved. This is the new way of data centers. So when we go get licensed in other states, we're just showing them the Norway model, saying, let's take those containers and take similar containers and put them on your facility and we'll abide by all the local regulations.
But if Bitcoin drops below 30,000, 25,000, does that start to concern you in that business model?
Of course, and that could happen, but I've built a state-of-the-art data center. I think I'm ready to lease it out to Microsoft or to Google or to Ford or to Tesla or to all of these companies that are storing data by the gigabyte every week. So I'm not worried about that as much. My concern is, can I do it as an investor and not, it goes right back to the SEC memo. I read the memo and I go, whoa, I don't want to get involved in a carbon audit, that's for sure. Not if I'm bringing institutional capital in beside me, and neither do they. So they're forcing us. It's really remarkable. I would have said the government would have done this on its own until I read the Larry Fink letter. He's basically saying, I want to move in this direction. I get it.
Okay. Last year at Bitcoin Miami, there were a number of question marks regarding the industry.
Yeah.
I think some of them have been answered to a degree. Last time you and I chatted remotely, you said that you are ruling out your concern that Bitcoin in the US will be outright banned, considering the Biden executive order, which shows that 16% of American adults have dabbled in crypto. It's political suicide, to quote you.
Very good.
paying attention
Yes.
to even think about banning it. I want to see what else we can rule out. Can we safely rule out, in your mind, other existential threats to Bitcoin?
Well, I think you have to start about threats to crypto as an industry. And so I think what's happened since you and I last talked, we're taking stock a year later. I think politicians have figured out that blockchain and blockchain derivatives and centralized and decentralized finance in aggregate as an industry has a lot of potential in terms of productivity to the economy. And all of a sudden, they're watching other jurisdictions become more advanced in policy, like the Swiss, like the UAE, like Canada, like England.
Well, UK saying they want to be the leaders in the field now.
And so I just heard from Jean Charest up in Canada, his team today saying, we're starting to think about Canada leading. And I think he's going to be the next prime minister. So I definitely want to get involved there. And so, for me, I think we can rule out that crypto as an industry is going to be banned in the United States.
Okay.
I think we're safe now. We've landed.
We've landed. Can we therefore rule out Bitcoin going to zero?
Bitcoin's never going to zero. This is a personal opinion. Not going to happen. There's enough people around the world that see it as a store of value, me included, that it is a 5% weighting in my portfolio, just like gold is.
Peter Schiff is going to be so upset when you hear that.
But that,
So
I
Bitcoin is never going to
appreciate
zero.
Peter's opinion, and I listen to it. I actually do. He's one of the guys I listen to. I like to hear alternative ideas. I don't agree with him on Bitcoin, and he's yet to be right. And so the whole key to this is diversification. I said 5% weighting. That's a full allocation into one asset, Bitcoin. But I also own Ethereum. I own Solana. I own Hashbar. I've got Polygon. I bought a big piece of that private placement. I've got into Avalanche. I mean, there's so many different. It's all software. It's all software. And so if I'm buying Google and I'm buying Microsoft, why am I not buying these software ideas? And I am. But now I have the confidence in listening to the regulators that they're not going to make it illegal.
Okay, so Bitcoin's not going to zero. Bitcoin's not going to be made illegal. What about other existential threats like a supercomputer hacking?
Yeah, no, I've heard this, and I'd ask you, let's say you're a rogue agent and you're going to acquire a supercomputer to hack crypto. You're trying to make money. It would be actually better to mine Bitcoin with that supercomputer and be awarded coins faster than everybody else. That would make you more money than trying to hack everybody's account. Because it's going to be really hard in terms of how much computing power you're going to need to do it. Meanwhile, why not use it to make Bitcoin or mine anything else for that matter? And so until it's more interesting to hack with power, most of that computing power is going to be used to just make more crypto. And so that's why I'm not a big believer in Dr. No sitting under an island hacking all the Bitcoin.
I like the James Bond reference.
No, I like it too, It is, but I don't think you should, it dismisses security concerns. Everybody that gets involved in crypto loses their first wallet. That's my theory. It happened to me too. And you don't like to talk about it. I'm open about it. I lost $52,000 the first time I dabbled. I got ripped off. I've never been ripped off again. It was a good, important lesson.
You lost your keyword or you got hacked?
I got hacked.
Okay.
So what happened was somebody hacked my passphrase, and I watched it being removed out of my account.
Ooh, painful.
Very painful. And I've kept those addresses to one day. Maybe I get them back, obviously not, but I learned how to avoid that happening again because now I have millions at stake. So I'm much more concerned about security.
Okay, so I know I have to wrap it up, but you're not concerned about a supercomputer hack. You're not concerned about regulation. You're not concerned about Bitcoin going to zero. There's the other concern that we're still dependent on the electric grid, on an electricity, and should the world come to an end or should there be a massive electricity fallout or power outage, then that's a huge problem.
Well, we'll help that with Bitcoin mining done off sustainable sources, because in every community that I'm setting up and I'm investing in, we're providing power as well. So we're trying to build excess capacity with our turbines or our nuclear power plants. And listen, to me, Bitcoin miners are going to be a solution to this. But everything you talked about is a concern. You should never rule out anything as an investor, which is why you should have diversification.
Sure.
I'm maxed out on crypto now. I'm 20% of the operating company's balance sheet. I can't own any more than this, according to our own mandate. but I'm very happy to have that much because it's the most interesting sector I'm involved in.
So there is nothing right now that concerns you regarding Bitcoin. Are you going to sleep soundly when it comes to Bitcoin specifically?
I am concerned about ESG policy. I am watching this happen at an incredibly increasing pace. I keep talking about the SEC thing. The first call I made was to my auditor when I read that.
Okay.
And I said, are you going to sign my carbon offsets if I use them?
Maybe find a new auditor, Kevin.
You really should. You should start. It's a great, because you're great at what you do here. You should pursue how this is going to work if tomorrow the SEC put that order. Find me an auditor that's going to sign that statement, that's going to take SEC legal risk. I don't think you're going to find it. They are going to really screw up the carbon credit market.
So sounds that other than that, you're a year later even more bullish than ever on Bitcoin.
Yeah, no, you're right about that. And when we meet again here in 12 months, we'll find these innovations. What we're going to see, I think, is some policy, probably on stablecoins. That is going to blow that sector wide open.
All right, we will have to leave it on that very optimistic note.
All right, thank you so much.
Good to see you as always. Thanks, Kevin.
Take care.
Kitco News, special coverage of Bitcoin 2022, is brought to you by Coin Payments, crypto payments made easy.